Hello everyone, this is Terry with Futures.io, and as always, I would like to thank you for joining us today. Now, it's my pleasure to welcome back John Hoagland from TopstepTrader for today's webinar, 5 Top Traits of Market Wizards. If you have questions, please feel free to type them into the questions box throughout the event, and we'll answer them at the end. If you're watching us on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar, and as always, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I will hand it over to John, and you'll get the pop-up to share your screen again. All right,
Thank you, Terry.
looking very good. The show is yours.
All right, thank you, Terry. Thank you very much. And thank everybody for joining me and trusting me with your time. If you've been in futures trading at all for a while, I'm sure you've seen the disclaimer that was just up there. I do have some testimonials, so I just want to read that part of it for everybody. The testimonials appearing may not be representative of other clients or customers, and is not a guarantee of future performance or success. Nothing, unfortunately, can guarantee that in futures trading, because hey, futures trading is hard. Don't believe anybody that tells you that it's not. There's a lot of information and tools out there that, yeah, they may help you get to where you want to go as a trader, but when it comes down to it, it's really the hard work that you put in that's going to be able to get you to become sustainable as a futures trader. To me, that's step one, and then to become more and more profitable from that point forward. Like Robert Reyes says right here, no profession requires more hard work, intelligence, patience, and mental discipline than successful speculation. I've always said it is the hardest way to make easy money. The competition is fierce. They are professionals. We have to act as professionals. And I just love the fact that it's easy for somebody to be called an overnight sensation after it's taken 5 or 10 years to gain that kind of success. Just because you may not be in the upper echelon of successful traders that may require an innate skill, a gift. It's just like being a great violinist, but to be a competent trader and make money is a skill you can learn. Not all of us are going to end up being the best trader. And who says who's the best anyway? My dad was a trader on the floor for 40 years, and he used to tell me, hey, stay in your class. You know, not everybody is meant to be a 50 or 100 lot trader. We can learn, we can earn, and we can create a significant income for ourselves. You know, I am far from the best trader. I'm more of a survivor. I've survived these markets for pretty close to 3 decades now. Who am I? Well, John Hoagland, Senior Performance Coach. Maybe some of you know me, some of you don't. I've been in the industry for over 35 years, an active trader for pretty close to 30 years now. I traded on the floor of the Chicago Mercantile Exchange for 20 years, but the learning process on the trading floor was much more than just get a seat and jump in. I started as a runner. I worked my way up to becoming a phone clerk and a deck holder and then an ARB clerk. And it was a long process for me to learn the craft. And just because I got a membership doesn't mean I was successful right away. It takes time and it does take a lot of effort. So I migrated to screen trading in 2009, 2010-ish. And since 2011, 2012, I have been using the things that I've learned and some of the things I've learned from others, including, you know, many trading psychologists, how to help people get better at what they're doing. I can't guarantee anybody's success. My only hope is to get them to improve along their process on the way. So I think that's probably enough about me. I really enjoy what I do, by the way. When I see somebody who is getting better at and progressing at what they're doing, even just to become sustainable, where They're buying time. You're buying time, getting better at what you're doing, getting to know your craft better, getting to know yourself better, because these are lessons that everybody learns. There's 3-4 successful futures traders right here. Larry Benedict, for example, he's got a chapter in a very popular book. The chapter is called Beyond Three Strikes. He tried everything on the trading floor, got fired from everywhere he worked, kept getting backed, losing, and then finally found success. He just stuck with it until he learned the lessons that he needed to learn to be able to be successful at this. Tony Saliba, a very passionate trader, he got 50 grand together and turned it into 75 grand, and then lost all that gain plus $35,000. He brought the account up to 75 grand, lost it all the way down to $15,000 before he slowed things down, learned to trade one contract, and learned his craft that way. Linda Raschke, another famous futures trader, actually somebody that I'm acquainted with. She was backed in an option position and lost her entire account overnight. Plus, overnight, she lost everything and was now debit. And Dr. Brett Steenbarger has been an active trader, but he's also what I call the godfather of trading psychology. Now, one of the things about all three of these traders is they learned with other people's money. Now, we have some podcasts, we call it Limit Up. All four of those traders, and very successful, even some somewhat famous traders, have done podcasts on our Limit Up podcast. Talk about the opportunity to listen to their stories from the mouths of babes. There's your opportunity. Check out the Limit Up podcasts wherever you get your podcasts. Okay, now we'll get into the teeth of things here. There are a number of barriers that traders deal with. Believe me, I've dealt with all of them in my tenure in this industry, and I'm sure that many of you have been dealing with any or all of these. And these are really just very basic ideas. Our biology, Dr. Brett Steenbarger, again, the godfather of trading psychology, says we're set up to fail at trading. It's just biology. I like to call it we're basically hardwired not to succeed in trading. Why? Because nobody likes to take a loss. So typically new traders, when they start to get into futures trading, maybe they've done some sim trading and they feel as though they're ready to get into a funded account and fund their own account. Things change a little bit when there's real risk involved in your trading. That's part of the biology. Fear becomes a factor. And again, nobody likes to lose. So most of us are going to default to denial or flat out, just deny the fact that they could be wrong or be unable to take a loss, because if I stay in this, if I hold on, if I hope and pray, if I hold my breath, if I jump and scream or stand on the top of my head, maybe this market will come back and make me whole again. Most of the time, as most of you who've been at this for a while know, that's the wrong thing to do. 99 times out of 100, it's going to take you to a or a point of pain where you're going to have to get out. So especially after a couple of losses, even though we've taken two $200 losses, the first time the market gives us the opportunity to make 50 bucks, we're pretty quick to take that. And that's not going to work as far as I'm concerned. I'm more of a risk to reward type trader. I'm looking for cheap opportunities, cheap risk for bigger profit opportunities. I want to stay in those winning trades to the point where I will get paid. Sorry about that. I want to stay in those winners longer, and I want to cut my losses. This is what I think professional traders do, and it is kind of contrary to your biology. You're going to have to get used to changing the way you respond to some of those fears and some of those wires that are in your brain. Reason number 2, inexperience. Of course, inexperience is going to be an issue. Like Linda Raschke says, trading is a profession. If you became a doctor, you're looking at 6+ years of school. Why is trading any different? It is a profession. Okay, inexperience is probably the biggest killer of traders because your competitors are professionals. They've been at this for a while. Well, you know, the majority of them. There's always new people coming into the marketplace, but they're facing the same fears that you are, the same difficulties you are, and some of the same barriers that you are. It takes time to accumulate the market knowledge, and market knowledge is great, of course. It's very important to understand how markets work, how technical analysis can help you look for good opportunities. Whatever the tools you're using, it takes time to get to know them. Not all of them work for everybody. None of them work all the time. Some of them work some of the time. Some of them work the other part of the time. Market knowledge is great. What I find most fascinating and more important than market knowledge and experience is self-knowledge. Self-knowledge to me is, you know, of course, very important. This is an emotional, difficult endeavor, and your emotional makeup, the things that make you tick, your motivations, your fears, your foibles, your strengths, and your weaknesses are all going to be pulled out as you become more and more experienced as a futures trader. And as a trader, no matter what your experience level is, you don't know what you don't know. There's always more to learn. When I talk to coaching clients, people in the program who tell me, you know, I know this is going to happen, or I thought this was going to happen, but I made a mistake. I try and turn that experience of what they consider making a mistake into an opportunity to learn something. Every time you address the market environment is an opportunity for you to learn something. If you're in a trade and it doesn't go your way, you should be looking and learning, what did I miss that may have provided a better outcome for me in this situation? Okay, most people, we tend to get emotional, the biology kicks in, and we start trying to revenge trade. We start trying to get that loss back very quickly. That can very quickly spiral, as I'm sure many of us, myself included, know. Reason 3, emotions. We just touched on this briefly. Tony Saliba says 3 months of work disintegrates in a week. I've seen 3 months of work disintegrate in a morning. Emotions create most of what we call mistakes, and it's the ones that we make over and over again that are the most difficult to kind of get rid of. I know you can't answer me one-on-one right here, but if you want to, you know, if there's any questions about this at the end, do you ever find yourself making the same mistake and then saying to yourself right after it, oh, I always do that. Why do I always do that? Why do I always make that mistake? It's because it's a fear-based decision. Fear does not necessarily go through the thought process. I call those impulse trades because impulses are usually created by fear and emotion. Some of those emotions, we may be talking about revenge or fear of missing out, FOMO. When you get enough venom in your veins from revenge trading or a fear of missing out, you may just capitulate and say, the heck with it. I'm just going to take my max position. And if I lose it, I lose it. You really become someone who may actually sabotage themselves. Early entries and exits. Well, I know that this is the area that I should be getting in, but I'm afraid I'm going to miss this trade. So I'm going to get in early. Typically, with the people I talk to in my coaching clients and complementary coaching, and a lot of the traders that I work with, they'll tell me, I see a level and I'll get into the trade and I think I'm getting in a little bit early, but I want to limit my risk. So typically what happens is I'll get in the trade early, it'll hit my stop, which is really where I wanted to get into the trade to begin with. And then the trade will play out without me. So not only did I miss the trade, I got double slapped. I lost money trying to get into the trade early. Simply put, well, if that's something that you can account for that happens a lot, you have to stop doing it. Start getting in where you want, even sometimes get in where you would normally put your stop. So emotions they can be really diabolical. You want to watch those impulse trades. You want to watch and be mindful of when you are at risk of impulse trades. And intuition is kind of the opposite of that. Intuition is knowledge and experience. Okay, controlling emotions to me I can't see that it's really all that possible for any length of time. It's an energy vampire. It's very difficult to control your emotions. Yes, we can breathe our way through them. We can talk our way through those types of situations. But I've found over time, it's not necessarily easier, but it's been more helpful for me to control my response to those emotions. I'll recognize, hey, I'm getting emotional here. Maybe my response should be, I should step away for a little bit until I release some of those emotions or some of that venom I'm able to vent. Okay, always err to the side of being intuitive trader. There's so many different fears out there for traders. There's fear of failure, fear of missing out, fear of success, even fear of change. Change is difficult for people, whether it's good change or bad change. People will do anything to avoid change. Even those who've committed to the change of becoming a good futures trader. If you became a successful futures trader, things are going to change for you. You have to realize this, know it, love it, and want it for you to be able to create it. So don't fear the change you seek. If that change is success, be ready for the changes that success brings. Let's take a look now at some of the 5 keys to success. We've taken a look at 3 of the barriers, 5 traits to success. Of course, preparation. Before the open, after the close, when you're flat in your account. They mention objectivity is the name of the game. To me, that's an extremely important piece of information. Linda Raschke says Linda Raschke develops different scenarios for what she wants to do based on what the market may do the next day. She's not the only one. Many of you have probably heard the name of James Dalton, who, by the way, I've learned so much from in the years that he's been around and reading and writing his books and everything that he's done. That's the way he looks at the market as well. He develops different scenarios at the end of the day for what might happen tomorrow. And to me, that kind of preparation is vital, because then tomorrow, when one of those scenarios begins to play out, I can recognize it and I'm going to be quicker to respond to that. You've got to have a plan, business plan, a per trade plan. It's all about the preparation for trading. Got to have a plan. Everybody says have a plan and trade the plan. If you don't plan to win, you plan to lose. All of those colloquialisms and cliches, hey, they're actually important. I look at preparation as having a consistent framework that I can put over the marketplace that gives me structure, and context. To me, it's always been the market profile. For others, it may be the Fibonacci's. For others, it may be volume profile. For others, it may just be technical analysis or candlestick patterns. It's whatever works for you, as long as you use that framework consistently over the marketplace, and then find a way to consistently address the market environment within that framework. Okay, hopefully, I mean, that's a mouthful of words. Hopefully it's coming across and making sense. Yes, you have to look at the market in a consistent manner and address that manner consistently in order to be able to review your performance. And after review, you're going to look at any changes that need to be made that may bring forth a better performance the next day. Without that consistency, you have no consistent information to review or with which to change. This is why preparation is so important. To touch on the objectivity as the name of the game, to me, being a creative trader, being objective to the market's information, as a discretionary trader, I think this is, of course, extremely important to be able to accept information that may be contrary to what we think the market should do. Okay, this kind of lens through preparation, through all 5 of these keys to success, is being able to remain objective to the information that you're seeing. If I'm already sure crude oil is going to rally today, I don't have any space left in my brain for any information that may be telling me it's contrary, and it's going to put me at risk of missing some of the information that may help my outcome on a day like that. Okay, so it's almost like, you know, if you're not objective, if you have a bias, you're already a glass full of water and there's no more room for anything else. So try and be objective with your opinions about the market and creative about how things may finish out. Determination. We were talking about determination on all 3 or 4 of our traders that we were discussing before. Tony Saliba, Larry Benedict, Linda Raschke, Dr. Brett Steenbarger. Yes, it is very important to be determined. You're going to have setbacks. Success is not a straight line. Success is a wiggly, knotted mess, and you're going to get into situations. You're going to have good times. You're going to have bad times. Larry Benedict, fired from his first job, blew through his savings trading, funded by friends, blew through all of that too, but kept moving forward. Okay, we don't necessarily have to do that. It's just a matter of keeping the determination and the drive to continue no matter what is going on. You don't have to lose all your money to remain determined to be a futures trader, okay? A lot of it is just, having a thick skin, okay? Yeah, you're gonna get knocked around a little bit. It's gonna take some grit for you to dig your way through some of the situations and some of the things that are going to happen. If I had time, I could tell you some of the things that happened to me, and believe me, if I would have given up, we wouldn't be here today and I wouldn't be where I am today. I think it's very important to start slow. Keep your expectations reasonable. I think that one of the biggest killers of determination is having unrealistic expectations. We're not going to make $1 million this week. Somebody, when people ask me, how do I make $1,000 a week trading futures? I usually tell them, well, let's start by making $100 a week, okay, or a day, whatever I said. Okay, start small, stay determined, be true to your preparation, and you can Move on. You can do this. Anybody, I believe, can. Perspective. You really do want to start small. Compound knowledge is as powerful as compound growth of your trading account. I like Dr. Steenbarger's rule. This is something that I use with my coaching clients, but I'm a little bit tighter than this. Dr. Steenbarger says, never lose more in a morning than you can make up in a day, more in a day than you can make up in a week, more in a week than you can make up in a month, or more in a month than you can make in a year. When you're starting small, I like to go with the idea that, hey, you've been at this for a couple of weeks, months, or years. What's your best trading day in recent market activity in the last 2 weeks, in the last month? If you're trading one contract and your biggest winning day is a $600 winning day, think about the idea, do I have any business losing more than that in one day? I've been able to make 600 in one day. I don't think I should be losing more than 600 in a day. Everybody's going to have their own rules for this. Dr. Brett Steenbarger has his, I have mine. But to get better at trading doesn't necessarily mean you have to compound your trade size. You don't necessarily have to get bigger and bigger to continue to compound your trading knowledge. As a matter of fact, I think that you start small, you start trading one contract. Once you're comfortable and sustainable with one contract, you're going to go to 2 contracts. And to me, that's the biggest jump in risk a trader should take in their career, is doubling their income. From that point forward, if you're continuing to remain successful or at least sustainable, add another contract as you get comfortable, get your head wrapped around trading 3. Once you're comfortable there and you remain consistent and profitable, move to 4. Wrap your head around 4 contracts for a while. Every time you add risk, you're going to be changing your perspective. You're going to be changing your decision-making process through that perspective. You really want to remain a student, whether it's a student of the markets, whatever you want to call it. This is a learning opportunity, and it's one that we don't necessarily ever get the opportunity to just say, I get this now. I'm done. I don't have to do the work anymore because I get it. Things change too quickly. Once you have the answers, the market's going to change the questions. It's never an event when you become a good trader or a profitable trader or a successful trader. You always have to continue to do the work. And part of doing that work is the discipline, okay? Everybody says discipline. Everybody has that buzzword. You really have to define what it means to you. To Tony Saliba, it means knowing your boundaries, okay? Like my dad said, stay in your class, knowing your boundaries. Not everybody's meant to be a 50 or 100 lot trader. And of course, you want to understand the tools at your disposal, and you want to have a plan B or a plan C, okay? To me, discipline means the ability to hold off good things now for a much better outcome in the future. To me, discipline is, and this is one of the most difficult disciplines for me, is staying in a winning trade till it reaches profit target. It's the most anxious time in trading that I'm in, okay? So I definitely have to hold off good things now for a better outcome in the future. Discipline is, following a process until it becomes habit. When you find a process that works for you, you're going to doubt it. You're going to probably have periods where it's not working and you're going to want to throw that whole thing away, but that's not the right thing to do. You want to follow that process as long as it continues to earn for you over time until it becomes habit. And even then, you cannot put your left down. The minute you say, okay, I've got this process, it's habit, I don't have to do the work anymore, danger is at your door. It's happened to me, I don't know how many times. Consistent work and mindfulness on the things that are in your best interest. Discipline. Let's take a look at adaptability. Adaptability is it's about what works for you, okay? It's more than that. We've got a couple of ideas here from our traders at the beginning of this webinar. Set monetary P&L goals. Does that work for you, or does that not work for you? Setting monetary P&L goals for me tends to put me out of my strategy if I'm unable to reach them. It might just be that the market isn't big enough that day or that week for me to reach that P&L goal. So monetary P&L goals might work for Tony. Doesn't work for me. Larry Benedict, skewed risk to reward metrics. I'm big into risk reward ratios. I'm always looking for smaller risk than the reward I'm going to take if the trade plays out my direction. Some people look at it the other way. If you're a scalper, you may be looking at 1-to-1 risk reward ratio, but looking for a high win ratio. And Linda Raschke's adaptability is, hey, I'm going to be looking at all products and all time frames. And she has very specific setups that she's looking for. But to me, being adaptable is admitting you're wrong quickly, cheaply, and also admitting when you're right and being able to take advantage of that situation. Adaptability is, again, it's about accepting information that may be contrary to what we already think or what we're seeing, okay? Adaptability reminds me of a quote. I have no idea who said this, but it just reminds me of what it takes to be a good trader. And it's you have to have the mind of an engineer and the confidence of an artist. That tells me, yes, you have to have a process, you have to have rules, you have to have a way that you're going to address this environment, but it also tells me that if I'm too rigid in that, I'm going to miss information that will help my outcome over time. To me, trading is a whole-brained endeavor. There's two halves to our brain. There's analytical and there's creative. Learn to use both of them for a whole-brained look at the marketplace, and you can basically create a holistic view of what's going on in the marketplace. Is it easy? No. Does it happen all the time? No. But for my experience, there are times where the vision that I'm seeing in the marketplace really just kind of jumps out at me in 3D and gives me the idea that this is a high probable trade that I have to take. And it's not just rule-based, it's also the adaptability or the whole brain endeavor that gets me to that point. Okay, so I mean, we've taken a look at preparation. Yes, we need a plan, determination, get some thick skin, get some grit, because it's going to get messy. 3, perspective. Start small. Learn your craft before getting bigger. Discipline, yes. Learn to hold off on good things now for greater things later. Adaptability. Be creative. Two-sided, whole-brained endeavor. How can you begin working on good habits? Well, you have the opportunity at TopstepTrader to do what they did. They started by trading other people's money. You have that opportunity as well. Here's a couple of examples of people that have been funded this year. Brian G. in Brisbane, Australia. Over 600 people funded this year so far. Sarah S. in New Jersey, and Fez M. from Northampton, England. Fez is a performance client of mine. He succeeded both getting a funded account in futures as well as Forex. The combine and the process that we bring you puts you at a level of accountability and skin in the game where you can truly learn to trust your strategy, learn to trust yourself, and move forward as a trader. Okay, what our program does is it does help you develop, helps you hone consistently profitable trading strategies, Your objective at the time in the Top Step Trader combines are to show what you can be consistently profitable while managing risk. You do all of this in a random sim account. You don't have the accountability, the consequence, or the skin in the game. Here, you do. You have to be able to prove you can profit. The trading combines have profit targets. We want to see in step one that you're capable of putting up some profits. Of course, we're going to back you. We want you making money. Step two, we're going to show you're going to show that you're going to be able to manage risk. We want to see consistency in your trading that you bring from step one, slow things down a little bit, and manage the risk. We want to see that our capital is safe in your hands. Succeed in step two, you'll earn your funded account. Again, you're going to keep that first $5,000 you earn, and you're going to be keeping 80% of the profits after that. What traders are saying about us? Well, we've got a 4-star Trustpilot review. Leon says it's the best place to learn how to trade. William's talking about Top Step forces you to be disciplined and use proper money management. That's tough love. If you can't pass Top Step Trader's Combine, I would not recommend trading in a live account with a broker. And Salah says trading with Top Step Trader offers many advantages. Most important advantage is the trading combine rules, which help you to build discipline and understand finally what money management is crucial. Why money management is crucial. I apologize about that. So for all of you new people coming into the combine, we've got an offer for you, 20% off your first trading combine. You can go to that link, topsteptrader.com/futuresio. When you start you can sign up for a 14-day trial, but when you start your trading evaluation, enter the promotional code FIO18, FuturesIO18 at checkout. This discount does end on October 15th at 11:59 p.m. Central. I'm really honored that you were able to join me, and I'm looking forward to seeing what kind of questions anyone has. Terry?
Hi guys, feel free to start typing your questions in. And let's see what we have. How do I stop eating like a mouse and pooping like an elephant?
That's what was that? That is the biology that we were discussing at first. Nobody likes to take a loss, so we go into avoidance, and by going into avoidance, we actually create bigger losses. The inability to look for bigger opportunities or to stay in winning trades is why we create that. We take $20, $30 winning trades. We take $300 losing trades. It's all in that biology. We're hardwired to do it that way. It is up to us to find ways to flip that over. That is one of the biggest things I hear with people as they come into trading, even experienced traders. We all deal with that same thing. It is just simply the way we're built. We're all built to protect ourselves. So we try not to take losses, and we actually end up creating bigger losses. When the market goes our way, we become fearful that if it gets to 50 bucks, that may be it. And if I don't take it now, I'm going to lose that 50 bucks. So we end up taking those little wins and letting those big losses run when it's the opposite direction that we really have to learn how to do. We really have to work on doing that. You're not alone, I can tell you that.
Based on your experience, what is a reasonable expectation when starting?
A reasonable expectation when starting, it really depends greatly on the products you're trading, how often you're trading, your time frame. I think everybody's goal when they first start to learn to trade is to manage risk and look for bigger profit opportunities than the risk you have to take the trade. In other words, if I'm going to be trading crude oil and I see a support level, the first thing I'm going to be thinking is, okay, where does price have to go to prove this a loss? If it's 10 ticks, okay, I'm going to lose 10 ticks if this trade does not go my way. But what's a reasonable and probable profit target technically? What's reasonable and probable? If I can see the market actually giving me 20 ticks on this trade, I'll take that trade because I'm going to be either losing 10 ticks or making 20. Okay, so when starting out, manage risk, manage risk, manage risk. Look for those opportunities that offer a better reward than the risk you have to put out there to take the trade. This is a really complicated question, and I would love the opportunity to talk to you about it at length. I don't think we have the time to do that. Really, when we're new at this, we're learning to crawl. Once we've learned to maintain sustainability, in other words, we're not losing in an account, but maybe we're not killing it either. That sustainability lets us walk, and it also buys us time to continue to learn and grow about who we are as a trader, to increase our knowledge about markets, about ourselves. Just take your time, trade small. Don't focus on profits, focus on finding a process that you can maintain that may put you in a situation where you're going to be profitable over time. I don't know how else to answer that in this type of environment or situation.
Okay. It is fair to say that profits in trading come from assuming risk somewhere, and trying to limit your risk too much, for example with tiny stops, will lead to failure.
Yes, we call it dying by 1,000 cuts. There has to be a technical point of failure for every trade you take. It's not a static. It's not, I only want to lose $20 if I take this trade, because you're really going to be cutting off the opportunity on the other end. Trades never go from entry straight to target. You're always going to get some wiggle. You're always going to, and depending on your time frame, if you're a very short time frame trader, you may be able to, get away with 4 or 5 tick stops in a particular market, but you're only going to be looking for 4 or 5 tick stops in that. And markets are dynamic. There's no two opportunities that are exactly alike. So if I'm looking for a big opportunity, I may need to actually put more risk out there to stay in that trade before it gets the opportunity to start heading my direction. There was more of a statement what you said there, but obviously, yeah, you can cut yourself to ribbons with stops that are too tight.
How do I stop getting back into bad habits?
Man, it's not easy. A lot of it really comes from understanding when you're at risk of falling into the bad habits to begin with. Bad habits are going to typically be in impulsive, fear-based trades. It's the bad habits seem to be the mistakes, or if we're going to call them mistakes, the ones we make over and over again and we realize it right afterwards. Okay, we have to be cognizant of the fact that if that's something that's happening to us and we're realizing it immediately after the fact, that's a fear-based impulsive decision, and recognizing, perhaps that is the case beforehand is going to help you hopefully break making those same bad habits over and over again. One of the things that I like to tell people is, whenever you're feeling that way, like, okay, I'm going to take this trade and I'm not sure if it's impulsive or intuitive, ask yourself this question: is this in my best interest? And if you can honestly say to yourself, yes, maybe it's an intuitive decision. If not, it's probably impulsive. Doesn't mean it's going to be the wrong thing to do, but I find that impulsive decisions tend to have a much greater percentage of loss than intuitive decisions. So ask yourself, is this in my best interest? And you may catch yourself getting into those same mistake I make all the time situations. You may be able to keep those away.
Okay. To add on to that, on the Futures IO webinar page, there was a webinar a while back from Futures Trader 71 that was trading habits. What is your trading made of? And I think that one went into depth on how to make and break different habits. So that might be a right up your alley.
And FT71 is somebody that I would certainly listen to. I think he's fantastic. And if that's out there for you, definitely check it out.
I have challenges accepting the stop loss price and keep moving it.
That's that thing that says I don't want to take this loss. If it hits my stop, that loss now exists and is part of the universe. If I move this stop until it turns around and the market goes my way and makes me whole again, then it's not part of the universe. But if you've been at this for a while, you know that your first stop level tends to be your best stop level. You know, there may be times when you're going to get away with moving that stop and the market may go your way. That's just going to ingrain bad habits in your psyche. Stick with your first stop. If it hits your stop, move on. Look for the next opportunity. And hopefully that next opportunity will be an asymmetric opportunity worth much more than your risk, and it goes your way.
Let's see. In TopstepTrader, can they use their own platform? He says, I use NT with Neuro Street add-ons. He wants to know if he can use that, or does he have to use a platform provided by Topstep?
No, NinjaTrader is certainly part of our program. So any add-ons that come through NinjaTrader, you're fine with.
Okay. Are there any good reads, books, or articles related to trying to stop the pooping like an elephant that you would recommend?
Well, there's tons of great information on that. I mean, it's all about trading psychology. The Daily Trading Coach by Brett Steenbarger, The Disciplined Trader by Mark Douglas, Trading in the Zone by Mark Douglas, Enhancing Trader Performance by Brett Steenbarger. I mean, those are 4 must-haves and must-reads for anybody, I think, that is really serious about becoming a successful trader, because, you know, there's so many. I mean, that's just one issue that traders face, and yes, it is addressed in some degree, or in a deep degree, in all 4 of those books. So I'm just trying to think if there's. I mean, those would probably be the first 4 that would come to mind, and that's some pretty substantial reading right there.
All right, let's see. I think we're getting close to the end of the questions. As a combine trader and going with TSC, what kind of resources do the traders have to learn and grow?
Well, when you're in the combine, you have the opportunity to talk to a performance coach once a month for 15 minutes. There is more hands-on coaching that is available for you, but I would suggest, going through a couple of these complimentary performance coachings before you make any decisions on that. We do have the market forecast that is on Facebook Live every morning that I present some of my ideas in 4 markets. That's the S&Ps, crude, gold, and the 6E. We also follow that up each day on Facebook Live at 2 p.m. Central with a market recap. So the forecast is at 8:15 a.m. Central Time. Recap is 2 o'clock p.m. Central Time. There's also an increasing number of educational videos, and we're working, very hard on increasing the number of educational opportunities that are available right through our program and through our system. So there's also the TopstepTrader Facebook community, which is growing by leaps and bounds. So we have a whole community of traders that are looking at and discussing trade ideas and things to learn amongst themselves. So I think there's a lot of resources, and they are increasing all the time.
Okay. Let's see. What brokerage is used for multi-charts? It says multi-charts is supported for the combine, but MC has brokerage-specific licensing.
Multi-charts, I believe, goes through Rhythmic.
Okay. Do you have a community here in Melbourne, Australia?
Melbourne, Australia, my goodness. That I'm not quite sure of, but join the TopstepTrader Facebook community and ask. There may be somebody right down the street from you. I know we have a number of traders and funded traders from Australia. So if you ask around, you may find one.
Okay. That's it for the questions. Thank you for the webinar, for the information, and for spending some time with us this evening.
It was a great pleasure. Thank you, and thank all of you for trusting me with your time. Hopefully you found some useful information that's going to help you moving forward in your trading. Looking forward to seeing you.
Take it easy, John.
Take care.